Hello and welcome back to Stock Market Weekly, your 20-minute show catching you up on all of the notable moves across financial markets. I'm your host, Evan Medeiros, and we're going to move quick in this one because I'm a little bit pressed for time. These shows come out every Friday, so make sure you are subscribed. Check back in on those weekends to prepare yourself for the week ahead. Let's talk about this week. It was a tricky trading week out there. We saw breadth thinning out a little bit. We saw some mega cap domination where the majority of stocks were selling off this week or down this week. And you had some of the heavyweights like Alphabet now of the Mag 7 breaking out to new highs. We have Tesla breaking out to new highs. And so you're getting this sort of buoy effect here of these big companies trying to prop up the indices. We also have probably the biggest dilemma here for markets, which is the 10-year Treasury yield inching back up towards cycle highs going into the weekend at 4.40. So that continues to go up is not the right word. It's really accelerating up this week, and that is more of the concern. Dow Jones Industrial average down 7 days in a row. We're going to take a look at that. And then we also had good old BlackRock out advising up to a 2% allocation, kind of formally coming out and saying, you know what, 2% allocation, that's okay for Bitcoin in your portfolios. That was pretty interesting to see formal remarks coming out. We also have the Fed out next week with their latest policy decision, largely expected for a rate cut, but we are looking forward to perhaps some guidance into 2025. So plenty to chew on. Let's get into it right now. Okay, we're back. We've got some charts in front of us. Warden TC2000, that is the platform we're using throughout these videos. If you're looking for a new charting platform, check out the link in the description of this video, TC2000. It's a platform we support. We've got lots of guides, tutorials, downloads available for it. So check that out if you're shopping for a new platform for the new 2025 year. Let's get into the data here. You can see right-hand side, pretty mixed, but mostly negative week for the US averages here. The Dow Jones 1.74% down, S&P 500 down 0.64%. The Nasdaq stands alone this week, up 0.75%, and the Russell got hit hard, 2.5% down. You can see volatility was up across the board here as well. And if we look at the indices down below in these individual charts, you can see that nothing yet has flipped down to a bearish sell signal using our trend filter system here, so our green, yellow, and red dots. So momentum is clearly lacking. We're starting to, give up a little bit here in the Russell, in the Dow, and you can see some yellow dots getting printed. Gives you cautionary signs that things are changing here, but the prevailing trend, those green dots, the prior trend, is still the dominant signal right now. If we take a look at market breadth through sector analysis, you can see two things in the green this week. It was consumer discretionary and it was communication services. That was it. Communication services was basically flat. So it was really consumer discretionary, 1.16% up. Everything else was in the red, and in the red by a decent margin. This is some of that breadth deterioration we're going to talk about and sort of be the theme of this week's video. If we look at our smart trend filters, by the way, this is an indicator that is available on our website for download for TradingView and for TC2000 users. It just measures price and volume spanning across times or prior bars, and also has some price action relationship to it. But we talked about some of the turbulence we were seeing in some of these sectors, and now you're getting more sell signals produced on the sector level. So for instance, financials moving into a sell signal earlier this week. Energy has been that way. Industrials rolling over early this week. Materials, real estate, healthcare, right? So there's definitely some softness here. When we look at the upside, it's really these top three triumphant charts here. I mean, it's technology, it's communication services, and it's consumer discretionary. Those are the three pockets of momentum right now, largely Mag 7 sort of fueled there. And that's what's really dominating the rotation game in this market right now. If we take a look at sectors, I mean, this is our relative strength layout. This illustrates it nicely. I'm not going to go through all of these here, but just take a look at all of the individual sectors divided by or relative to the S&P 500. This is just another way to look at relative strength rather than absolute strength. But again, you can see like the consumer discretionary is a rocket ship moving up here, getting all the love right now. Meanwhile, almost everything else is, you know, just kind of falling lower or in the red here relative to the S&P 500. Now, if we get a little more specific, we take a look at market breadth here. You can see our favorite metric to look at, just simply 52-week highs and 52-week lows. And this ratio is now going in the wrong direction here. So you can clearly see that after this week, we've got a dry spell, a dry up here in the number of stocks hitting 52-week highs. And we're clearly getting an uptick in the number of stocks making 52-week lows. So that is not the direction we want to see if we are bullish on this market. And that's something we're going to want to pay close attention to. I'm not willing to throw out everything right now and say this is the sell signal, get out, it's time to leave. But it's something we want to pay attention to. This has my attention right now. This is not the way we want to see this ratio continue. What I would say is, you know, we want to see more of a signal here. I don't want to just see a slight rise in the number of stocks hitting lows, uptick, and then, you know, we find support and then it goes right back to the upside, right? That's why we don't want to exit everything immediately. This is something that we can use to inform our decision making, pay attention to. But what I'm looking for is just a more, you know, convincing break here on the number of stocks hitting 52-week lows. And it very well could be next week, right? So I'm not saying that it can't happen. I'm just saying I need a little more proof here after such a nice long stretch of breadth in the bull's favor. We want to just be a little bit cautious about running away after just a week of an uptick in selling here. So let's pay attention to it. Not the thing we want to see here, but we're going to keep an open mind. You can see the NYSE Composite Index up here starting to pull back as well. You can see our dials on the left-hand side, which basically is looking at individual stocks up or down on the week, all printing pretty bearish readings here. So breadth was fairly disappointing this week. If we go to a quick bit stop here for Investors Business Daily, they do sponsor the show. This is their IBD 50 list, and this is the top 10 stocks on their IBD 50 list as of about 20 minutes ago. And you can see it was a pretty rough week for them as well. We had CLS and RS both doing pretty well in the green here, but most stocks this week on their IBD 50 top 10 list were down. So we'll see if they can rebound. Good gains in the 1 month performance. And of course, you always get with IBD those strong, you know, sort of revenue changes or fast growers is said another way in their individual picks. So check out a link in the description of this video. Get yourself access to IBD 50 and their digital subscription using our referral link. Now, let's round it out here and then start to look at some charts with our macro slide. You can see that dollar index was up, and up again. We started to get a little bit of what looked like a rollover here, and then the bid just came right back. And this is, you know, really causing a bit of a stressful sort of wrecking ball on financial conditions with the dollar getting so strong here. It's going to start to perhaps make things break a little bit. We shall see. But for now, the dollar's moving back up towards highs. If it starts clearing these prior highs here from just a few weeks ago, then I think we're going to put a lot more pressure on the stock market. I'm still not certain that's the case, but you know, we're going to want to keep things open-minded here into the end of the year. You can see 10-year Treasury yields also moving back up to the prior highs. So getting close to that 4.5 level, which is where we were just a few weeks ago. In terms of commodity land here, you can see that the oil had a nice week this week, up 5.65%. So really kind of clawing back and printed a good week. Same thing with gold. It was up. I mean, not as, you know, strong, but nice recovery this week, up 0.5%. Bitcoin was pretty much flat. I think that was an inside week for it. Copper and silver were both down. So let's get into our individual stocks here. I want to talk about the Dow Jones first. Okay, so the diamonds, DIA, tracks the Dow Jones Industrial Average, and you can see here that we are on a slide. We are down 7 days in a row here. Pretty orderly, all things considered, though. You got to hand it to the sellers here. They are sort of exiting the market gracefully, and what we're waiting for is to see if we can put in some type of higher low. If we zoom out and we look at this chart, I mean, we do have a nice kind of orderly higher highs, higher lows throughout the course of this year, really ever since the summertime. I mean, you could call us range bound for the, you know, second quarter of this year, but then we've been kind of just grinding up here in maybe more of this broader sort of channel that the Dow has been in, it feels like this pullback, I tweeted this earlier in the week, is getting, or I tweeted on Thursday to be specific, is getting a little bit long in the tooth. And we should see buyers start to step in here, at least for some type of dead cat bounce. Now, I think measuring that bounce is going to be important, but the diamonds here do seem to be quite oversold in the short term, and we're going to want to see if this trend can continue to persist. If you take a look at the S&P 500, this looks pretty different. So if we take a look at the S&P here, it basically spent this week kind of chopping sideways. It's just kind of hanging out at highs. Again, the volume's a little bit lower here, and it's not really doing a whole lot. In fact, it seems like it's kind of constructively working off perhaps this recent uptrend from the end of November. So right now, S&P 500 is hanging out these highs, kind of consolidating sideways. Nasdaq 100 is just, kind of grinding up, right? So you've got a tale of kind of two markets here. You've got Nasdaq and big cap tech, which is working again. It's Mag 7. It's in full force. It's in rotation, and that's helping fuel and kind of push the cues to this upward drift. And if we go to the Russell 2000, this looks pretty similar to the Dow Jones, where it's getting that downward drift. So the Russell 2000 here is kind of similar comments to the Dow in the sense that it's retracing about 60% or so of this latest impulse leg up from the middle of November up to the recent highs. And again, you'd want to see the buyers start to take a quick stand here sooner rather than later. Otherwise, you're really going to come back down all the way to this pivot here, and that would start to, kind of make things a little more messy for the Russell 2000 and for the diamonds alike. So mega cap tech has really sort of regained its throne, and we're going to see if we can play some catch up here on the Dow Jones, on the Russell 2000, and the S&P, I guess, a little more broadly. Now, a couple of things that we're going to want to pay attention to see if that happens is Treasury yields. So IEF, 10-year Treasury bonds, take a look at this, dropping like a rock this week. Again, this is the inverse to yields themselves. You can see this is the IEF 10-year Treasury bond fund, and you can see it's basically been in free fall for the past 6 or so days. And so this is putting a lot of pressure. You can look at TLT as well. You can see, again, just kind of dropping like a rock, really no bid in sight here. And if you look at a weekly chart, this looks like a pretty bearish looking kind of continuation pattern lower. So this is going to be problematic. If this continues to accelerate here, it's going to start to break things. And so we're going to want to pay attention to what the bond market is signaling to us right here. Of course, we've got the Fed next week and their guidance on what they're anticipating in terms of rate cut schedule. If they can update their guidance into 2025, might be pretty influential in this market. So Treasury bonds, IEF, that is certainly something to pay attention to. If we take a look at gold here, you can see that, again, it was up slightly, not the most inspiring week, but a lot of volume traded this week for gold. You can see that it's still kind of just in a consolidation pattern on this weekly chart. You can see silver, definitely not as pretty here. It did close down 1.77%. Again, very heavy volume coming in and still very much in pullback mode. If we take a look at oil, this was the constructive commodity of the week. You can see that after last week's tough performance, really last 2 weeks of tough performance, as it got very close to the bottom end of this range, which we were signaling last week, you can see buyers stepped in and really starting to push us out of this consolidation, this lower high pattern that it's been in. So it's constructive for oil bulls this week on the price of crude oil. So let's now get into some individual stocks, then we're going to wrap early this week. Google, I think, was notable. So if you throw on a weekly chart here of Google, up 8.65%. Again, want to know where all that breadth deterioration is hiding. It's behind these mega caps. So here's Google on some of the heaviest volume that we've seen going back multiple years. And you can see that it was an 8.65% breakout week. It did give up a little bit of the breakout here into the end of the week, but it briefly made new all-time highs and then sort of gave them back a little bit. So Google continuing to act well, nice gap up, a little extended, but you're getting your pullback right now. So don't sleep on that one. We saw Broadcom on earnings this week on Thursday night. Nice gap up. I mean, huge gap up. Now, I believe $1 trillion company, or at least it was at one point. You can see one of the heaviest volume traded sessions ever for Broadcom, and or in the last 5 years, I guess I should more correctly say, and a nice breakout here. If you kind of pin that on the heels of NVIDIA, which we've been a little more pessimistic on, you can see that NVIDIA has lost that 141 level. It's kind of lost some of this slope here. It doesn't mean it has to be the end of the world. It just might mean it needs a lot more time to consolidate, maybe a couple more weeks, maybe into the next quarter, or before it reports earnings. Just might need more time to digest and sort of grow into some of that rapid stock appreciation that it saw throughout this year. But below 141, it's just not that interesting to me. If we can start to consolidate for a few more weeks and then we start breaking above 141, then that could be a fantastic kind of breakout trend continuation play. Just doesn't feel like it's there right now. But Broadcom, with semis just generally, is trying to buck the trend here. It's trying to lift up this semiconductor SMH, for instance, a little bit, sort of offsetting the NVIDIA weakness. Lastly, if we look at Tesla, this has had a tremendous run as well. It was up 12% this week. It's new all-time highs. Congrats to the bulls here, sticking it out, moving back up firmly into the 1.3 or $1.4 trillion club, and new all-time highs up around 436. It's extended in the short term, so it's a chase, but it's certainly got that momentum behind it, and it's probably got that holiday drift here for Tesla bulls. Lastly, I'll leave you with Boeing here. Haven't been following the story of the potential catalysts here. Boeing's been, generally speaking, a mess over the past multiple years for lots of different reasons. And you can see, though, it is starting to come alive a little bit here, up 10%. Heavy volume week, breaking up above some of the short-term kind of cluster of highs and range that it's been in. So maybe it's, sort of a zombie coming back to life, right? It's something left for dead that's starting to come back here for Boeing. So keep an eye on that one. So that is it. That's what I have for this week. Lots of other things going on underneath the hood with individual stocks, but we're going to start to wind down into the holiday sleepy time of year. We've got the Fed out. I would expect basically a lot of the trading gets kind of wrapped up this week for a lot of the professionals before they take that last week of the year off. And then we very quickly start the new year, new administration, and a whole new set of catalysts and headwinds to think about. So that is it for me. Thanks as always for tuning in. Don't forget to subscribe to the channel so you never miss a video update. We've got lots of cool links for you in the description of this video, including IBD sponsor, our Warden TC2000 downloads, and our trading systems. I did update. You know what? I'm going to take one quick look here at our trading systems this week, because I did update this data. So you can see that in terms of our automated trading systems that we're running here, 3 different trend swing trading systems and 1 trend following system. You can see that we did do a little bit more buying this week. Our Lamerick trading system, our short-term trading system, was ratcheting up exposure this week. If you recall last week, it was kind of mid, had a decent amount of cash on it, had about 50% exposure, I believe, give or take. And you can see now it's going into the weekend here on the long side, on borrowing on margin here. So very much in the market here, picking up exposure throughout the week. A lot of concentration in sort of financials, industrials, healthcare, some of those things that are getting beaten up, that are pulling back, still in uptrends, is sort of what it's been attacking this week and building some of that exposure. So we'll see if it pays off next week. Again, it's a shorter term system, but you can see basically all of our swing and trend following systems are fully engaged in this market right now. They're clearly picking their spots, and we'll see how that shakes up for us. We've got trials available. We've got all our performance information. If you think these trading systems can be helpful, check them out with a link in the description of this video. And with that, I will say thanks again for tuning in, and we'll see you back here in a future video. Take care.